Yeah, what's good? Welcome back. Let's get straight into this. Often, you might find fund managers on mainstream media outlets, whether it's Bloomberg, Reuters, CNBC, Financial Times. They may talk about the topic of rebalancing their funds or rebalancing their portfolio. And it's a really, really simple concept, but it's an effective concept, particularly if you're trying to manage the risk within your portfolio. So in today's video, I'm going to talk a little bit about rebalancing, just explaining what it means and how it works. But I'm also going to actually rebalance my trading 212 portfolio right before your very eyes, so you can see how simple trading 212 have made it, particularly with the pies feature and functionality. So if you want to know all of that plus more, please like, comment, subscribe, help the channel get to 8k subscribers, follow on Insta and Twitter at Infinite Investors. And if you're wondering what app I'm using the Trading 212 app. Click on the link, sign up, deposit £1, and you will get a free share of up to £100. But let's get straight into this episode for Trading 21 Tuesday. So listen, right now I'm obviously on the pies, and you can see my three pies: the 30 fund, the DPMO, and the kiddies fund, and they're all doing pretty well. 30 fund is 8% up. I only started depositing into it last week. DPMO is up 3%, and the kiddies is up 3% as well. So I wanted to give the rebalance feature a little bit of a test drive, and I thought today might be a good time to talk to you guys about rebalancing and give you a bit of an overview about what that is. So basically speaking, the purpose of rebalancing is to maintain a desired target allocation, and that might be according to risk. Typically it's according to risk, but sometimes there could be other factors such as performance or such as the climate that you might be entering into from an economic level. Effectively, what you might find these portfolio managers might say is that we're a little bit overweight in this position, we're a little bit underweight in this sector, or they might say, you know what, we need to trim our positions in this industry, or they might just come out and say we need to rebalance our portfolio. Effectively, they're all saying the same thing, which is basically we need to buy some stocks and sell some other stocks in order to keep a target weight and target allocation. Now, obviously, if you've got pies, you would remember that when you initiated and started to create your pies, you created a target allocation. So I wanted this portfolio to have 15% be in Amazon, 15% to be in Tesla, 10% to be in Taiwan Semiconductor, etc., etc. And so if I've had specific reasons or rationales for doing that, then obviously I might want to try and keep my portfolio closer to that target allocation as much as possible. Now, it's going to swing out of that because obviously the stock market moves on a daily basis, on a weekdays, and some stocks are going to perform better than others. So if a stock is performing better than another stock, then that obviously is going to upweight and overweight that stock, because now I've got more money in that stock because of the money I've earned. And other stocks are going to be underweighted if you take it as a percentage over the overall portfolio. So in today's video, let me do a live rebalancing. I'm going to show you how it works, and we're going to see what that does to my performance within these funds. Now, I've chosen to do it on the 30 fund and DPMO just because those two are behind my current target in terms of the goal that I've been set. So the 30 fund is a 3-year goal, the DPMO I believe is a 10-year goal. The kiddies fund is on track, so I'm just going to leave this one for the time being, but we're going to rebalance the other two funds and let's see how that goes. So first of all, you click into your fund and you got your fund there, and then you click into holdings, and you can see that Amazon is 14.49%, but the target is 15%. Tesla's 18.71%, but the target is 15%. I only invested in Tesla last week. Effectively, Tesla was something that I just invested in as part of this pie last week, and it's already up 35% in a week. It's ridiculous. Tesla is one of those crazy stocks that I try not to get too excited about. I mean, I don't really have that much in it, to be fair, but not something I'm going to get too excited about, if I'm honest, because one, I don't have that much into it, and two, it's such a wild stock that I just feel like darker days might be ahead, but who knows. Every time I predict things, it tends to be wrong anyway. And then you might see things like Etsy, for example, is a bit less than my target allocation of 10%. So all you got to do is basically click on this button which says rebalance, and then it tells you which positions it's going to sell and how much it's going to sell of it, and which positions it's going to buy in order to basically rebalance your portfolio. And it's honestly that simple. So based on what you can see here, I'm overweight in Tesla, I'm overweight in Nvidia, I'm overweight in Square, I'm not overweight in real life because I'll be hitting that gym boy, but I'm overweight in these stocks, and I'm underweight in Fastly, Taiwan, Etsy, Trade Desk, Amazon, and Adobe Systems. So I just click confirm rebalancing, and then you see the progress bar at the top, and it's at 66%, and soon it's going to hit 100%. It's at 88% right now, and then it's rebalanced. The 30 fund, this pie will successfully rebalance, and now you can see 10%, 10.01, oh sorry, 10, 9.95 for Square, 10.01 for Adobe, 10.01 for Nvidia, 10 for Fastly, 10 for Taiwan, 15.01 for Tesla, and 15.01 for Amazon. So now obviously that pie has now been rebalanced, and I should have actually quoted what my percentage was beforehand to see what that difference was, but I think it was in the 8%, so it's slightly gone down for the time being, but we'll see how that goes. Anyway, let's do it right for DPMO. So DPMO, currently you can see I'm 3% up in DPMO, £6, and we're going to do the same thing with DPMO. So you click on holdings, you can see that Neo, I'm heavily overweight on Neo because Neo's gone up 14%. I'm a little overweight on Cloudflare, but I'm underweight on Virgin Galactic, and I'm underweight on Lemonade. So you click on rebalance, you click confirm rebalancing. It's only Neo that's being sold because I'm overweight on it, and everything else is going to be bought in order to get back to the target allocations of 20%, 20%, 10%, and then 50% for Neo. So that's obviously been done. I'm now waiting for the rebalancing to happen, and obviously it's going to take a little bit of time because it's obviously buying all of your positions, selling all your positions. So effectively a trade is being made on all of your positions, whether it's buying or selling. Let me make that clear. And so obviously it has to manage that. So that's why it's probably taking a little bit of time, but at least it's got the progress indicator so you know what's going on. So yeah, that's currently being rebalanced. This one's taking a bit longer, I'm not too sure why, but hopefully it'll be done soon. 50%. Honestly, this is such a cool feature, man. And yeah, this is the first time I've rebalanced right in front of you guys, and I think, you know, definitely if this pie was successfully rebalanced, the development of premium monetary opportunities has been rebalanced. So you should see it start to update, and you can see, yep, 10% on Lemonade, 19.99, so effectively 20% on Virgin Galactic, 20.03 on Cloudflare, and 49.97% on Neo. Now that's been rebalanced, and you can see the percentage has slightly dropped from that rebalancing exercise because obviously I've trimmed a position that was doing well, but I would have expected it to be similar-ish because I'm buying positions it's not doing well, so it's averaging down. Anyway, for whatever reason it's gone down a little bit, but I'm not too bothered about that. So yeah, that's rebalancing, man. I wanted to keep this one short and sweet. We didn't really touch on the kiddies pie. Obviously the kiddies pie is on track. I'm not going to do much of this. You can see Walmart's doing well. Walmart had a fantastic earnings update. They did extremely well. I think they did earnings per share of $1.56 versus $1.25. That was effectively estimated. Their e-commerce business went up 97%. So yeah, you know, really happy with Walmart within this kiddies pie, and again, the vision for this specific pie is the businesses that I think is still going to be around in 18 years, generating revenues and hopefully growing. So, you know, much safer business, but you know, businesses for the long term, and this one seems to be doing better than the other two, which are a little bit more speculative, a little bit more risk, but obviously I want to try to get a nice sizable return in either 3 years or 10 years. Now that's all done, so hopefully you found this useful. If you did, like, comment, subscribe, and I will catch you next time with another portfolio update. Peace.